Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 19th of February 2021 and we're looking at the headline published by Bloomberg today pointing out that gold's start to the year is the worst since 1991. So let's take a look. Now, yesterday we produced a video entitled, What Recent US Economic Data Means for Gold and Silver, when at the time of writing gold was down $4 at $17.84 and silver was up 18 cents at $27.23. And we concluded that we expected to see a little further downward pressure on gold, but are still of the opinion that $1,700 is strong support and $1,750 will offer a moderate support base. And silver may have some downward pressure further to go, but generally will hold its own until the manufacturing base really starts to motor. And then we believe this will be advantageous for silver prices in the months and of course years ahead. Well, this early afternoon, at the time of producing this, which is 12:46 GMT, gold stands at $1,772, but has been as low as $1,761. And silver has dipped and is $27.06, but fell to its lowest level for the day in the early hours of this morning to $26.45. And we are certainly witnessing silver constantly dipping into the $26 territory, but then recovering again to some extent. How long this will continue, we shall have to wait and see, and probably will comment more in tomorrow's weekly update, which we publish every Saturday. Now, what has captured our attention today, though, is an article published by Bloomberg just a few hours ago, which we shall now read and then comment upon. So let's take a look at that article. Bloomberg article dated February 19th, 2021, 10:29 a.m. GMT. Gold goes from a star commodity to laggard in shocking reversal. Gold began the year with lofty expectations on the back of a record high and its biggest annual gain in a decade. Instead, the precious metal is off to its worst start in 30 years. Spot prices touched a 7-month low on Friday, deepening a slump and breaching through a support level that analysts say could portend further losses. Bullion paired some of Friday's losses as the dollar moved lower, though is already down more than 6% this year. The metal, which surged last year on pandemic-induced haven buying, low interest rates and stimulus spending, is now 2021's worst performer in the Bloomberg Commodity Index. It's suddenly facing a host of unexpected stumbling blocks. Chief among those are the surprising resilience in the dollar and a rally in US Treasury yields, as economic indicators show recovery from the pandemic is well underway. With rates going higher and inflation expectations peaking out, we're seeing a lot of profit taking in gold, and people are going from gold into industrial metals such as copper, said Peter Thomas, Senior Vice President at Zana Group in Chicago. It's a perfect storm. Gold's start to the year is the worst since 1991, according to data compiled by Bloomberg. A gain in Treasury yields is weighing on demand for non-interest-bearing bullion, with the metal extending losses after forming a so-called death cross pattern earlier this week. Yields on 10-year treasuries climbed to the highest level in about a year this week. Inflation expectations have also climbed, with 10-year US break-evens touching the highest since 2014 earlier this week. Still, that may not be as supportive for gold as it typically would be, according to Carsten Menk, an analyst at Julius Baer Group Limited. A rapid recovery will inevitably lead to higher inflation. This should not be positive for gold, as it is a good kind of inflation, reflecting an acceleration of economic activity, and not a bad kind of inflation, signalling a loss of trust in the US dollar, he wrote in a note. The economic recovery should prompt investors to sell some of their holdings of the haven, he said. There are signs that's already happening, with holdings in gold-backed exchange-traded funds falling to the lowest since July, data compiled by Bloomberg show. Holdings are down about 1% this year, and sustained outflows could prove a serious headwind. Spot gold dropped as much as 0.8% to $1,760 an ounce, the lowest since July the 2nd, and was at $1,770 by 10:13 a.m. in London. Silver was little changed, while platinum and palladium declined. The Bloomberg dollar spot index weakened 0.3%. Still, some see prospects for gold to make a comeback, betting that the inability of governments and central banks to normalise stimulus policy will see it climb again. Goldman Sachs Group Inc. said in late January that with prospects for additional stimulus and Federal Reserve interest rates on hold, the metal remains a compelling investment for the medium to long-term investor. For us, the behaviour of gold at the moment resembles that of a tsunami. In the first phase, the water recedes, the gold price falls, and then in the second phase it comes back all the more violently, said Daniel Briesemann, an analyst at Commerzbank AG. At the end of the year, we now see gold at $2,000 an ounce. End of article. Okay, now, we do not want to get into the weeds of good inflation versus bad inflation, but we get the point of the authors. If the economy is picking up and lockdowns ease and the production cycle restarts and grows, then of course prices will rise as people get back to work and start spending again and there's greater demand, etc., etc. Now, we saw on Tuesday, for example, that retail sales figures were up strongly in January, at 5.3%. But we admit that's from a lower base than normal, but it is positive news. Though, again, admittedly, yesterday's initial jobless claims figures, rising from 848,000 to 861,000, was disappointing, and to many slightly unexpected. But most of the economic news that we are witnessing is showing a level of improvement. Now, we can debate all day whether these economic figures are accurate or massaged or do not represent reality, but frankly that doesn't matter at this stage, as these are the figures that analysts work from and calculate their next investment or disinvestment moves. What is worrying for some is that the general conversation currently is that the next move for gold is down. And we were fascinated to see the pumpers reeling out videos in the past few days, particularly some who produce videos once every week are now doing them daily, really pushing the need to acquire gold ASAP. You see, they can see that the market trend may work against them at the moment. Dealers have had a feast these past couple of months, and they're becoming worried that famine may be around the corner. I'm exaggerating slightly. From our perspective, we will look at any fallback in gold really as an excellent buying opportunity for the medium to long term, and possibly even the short term, aka end of year or into 2022. The industrial metals should do well if the economic pickup or recovery is real and sustained. This should not be ignored. And we are, of course, watching silver and platinum as both fall back currently to see an appropriate re-engaging point in which to buy again. We're going to show you just a very quick recap from Reuters. It is very short. But before we do that, we just wish to highlight again that any slide in the gold price is really an opportunity as opposed to a threat. But a word of caution. If gold does fall below $1,700, now we think it's likely to hold, but if it does fall below then, it could quite easily lose another $100 or even $200 from that level as sentiment becomes more bearish. However, we are anticipating it to hold close to that $1,700 level. We are confident there will be another leg up at some stage, and would welcome, frankly, the opportunity to increase our holdings first, though we would like to see premiums come down again, as like silver, they too have simply been too high, for us at least, to stomach. Now we shall end on a comment by Reuters and ask you to share your thoughts. And as always, if you haven't already done so, do subscribe please to our channel. So here's the Reuters article, and then the video will end. Reuters article dated February 19th, 2021. Gold slides to 7-month low as strong yields sap appeal. Gold prices fell to a 7-month trough on Friday, extending its 7-day long streak of declines as rallying US Treasury yields drove investors away from the non-interest-bearing precious metal. Spot gold fell 0.2% to $1,772 an ounce by 09:45 GMT, falling for a 7th consecutive session, which was last seen in November 2018. The metal touched its lowest since July the 2nd at $1,759 earlier in the session and have declined over 2.7% so far this week. US gold futures fell 0.1% to 1,772. As long as yields move higher, the market is simply going to struggle to find a footing, said Saxo Bank analyst Ole Hansen, adding that if the metal fails to hold the 1765 level, a further downward move could be likely. Benchmark US Treasury yields remain pinned near one-year highs hit earlier this week, prompting investors to dump bullion, which pays no interest, in favour of traditional risk assets. An unexpected rise in US jobless claims that undermined recovery hopes also failed to keep the safe haven metal afloat. But analysts say gold should still benefit from continued loose monetary policy and low real interest rates this year. Commerzbank analysts said in a note that gold's behaviour resembled that of a tsunami, with the water receding in the first phase. That's the gold price falling, and then coming back all the more violently. The gold price rising significantly. Auto catalyst metal platinum fell 0.6% to $1,267, but was set to post its third straight weekly gain, having hit a 6-year peak earlier in the week. Platinum's demand and supply balance will depend on investment demand in the near term, Saxo's Hansen said. If the ongoing overall reflation focus supporting commodities, with a tight and a green theme attached to it, continues, then platinum will continue to attract investment demand. Meanwhile, palladium gained 0.1% to $2,353 an ounce, and silver rose 0.3% to $27.09, and was set for its biggest weekly decline since mid-January, falling 0.9%. End of article. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.